So we had our rating system that's been in place since 1975. It's never been adjusted or changed. So as of October 1, 2021, we have a whole new system out there.
Hey, let's not do anything for 45 years and then completely change it. Is there
so far it doesn't sound that drastic.
Is there anything that's going to make us fall over in our chair?
Like, look out.
The elevator from the first floor to the second floor is probably expensive to
They actually do charge you a higher premium for elevators.
All right, welcome to another episode of the Context to Contracts podcast. I am Bryan Lovell with our co-host, Mr. John Jones, and today we have a special guest, Miss Lindsey O'Donnell from Florida Best Quote. Thanks for joining us, Lindsey.
Thank you for having me.
She is a flood expert here in the Pinellas County area that we're going to spend some time talking to her about what has transpired over the last couple of weeks with the new flood policy changes that came into effect. We're actually going to go through, this will be cool, we're going to actually go through a couple of case studies, 3 or 4 case studies where we're going to look at a property, what the premium was on flood before the change and what it is now. And then talk a little bit about maybe what are some of the risk factors that went into mainly the increases. I think she found one that was a decrease.
Went down.
We had found one that went down. So cool. So anyways, thanks again for joining us. By the way, if you're a regular, we want to thank you so much for joining us here on the Context of Contracts podcast. If you're new to this, make sure that you like and subscribe so that you can see our new content that comes out every week. And with that, John, kick us off, brother.
So I mean, the NFIP, right, the National Flood Insurance Program, went ahead and put in place October 1st, 2021, essentially non-subsidized flood policies.
Essentially a whole new rating system is what we've got. So we had our rating system that's been in place since 1975. It's never been adjusted or changed. So as of October 1, 2021, we have a whole new system out there.
Hey, let's not do anything for 45 years and then completely change it.
Yes. Not only that, they also just rechanged all the maps in coastal areas. So now we're moving people's flood zones, adjusting things. We've all been spending 2 years waiting for those maps to come out. And now just as soon as they come out, we get a whole new rating system that just changes everything. So it's been a bit of a whirlwind in the flood insurance market.
Yeah, and I think the biggest thing is it was kind of secret for a long time, right? They didn't give you guys any heads up as to how it was changing and what properties may or may not be affected. I mean, they just basically, some will go up, some will go down. We really don't know. Yeah,
it's definitely been interesting. As far as the flood maps go, those changing, we've had that information for a while, but when we've been telling people what to expect, we've been going off of the 1.0 rating factors. The risk rating 2.0 we've known about for a while, but we didn't even get information on what to expect until probably June or July of this year, and then the rates weren't even available until August. Yeah. Right. So we were having to kind of try and figure out what to expect, figure out what to tell our clients before we even knew what they would look like. All we had was FEMA came and said, well, you can expect about 7% of policies rates to increase. So this is great. Most people will stay about the same or only go up about $0 to $20 a month. However, that doesn't take into account Florida specifically, and it doesn't take into account Pinellas County.
Okay, so the 7% was a national number.
That's a national, right?
Yeah, and I might have that number a little bit wrong. I have that close somewhere in here, but yeah, estimate. They made it look better.
So the national estimate was around 7% of homes would be affected with an increase.
With a significant
increase. The reality is in Florida,
Louisiana, and Texas, I think, are the 3 biggest states that are impacted.
Our real coastal areas, yep, right on the waters.
Listen, I think this is a big thing, and part of the reason we wanted to bring Lindsey on and talk about this is, like, we live in the Tampa Bay area. We've been talking to an awful lot of realtors who are really concerned that this is going to be a major game changer for real estate in the Tampa Bay area.
Yeah, I mean, I think if you look back, I think it was 2015, right, when Congress didn't extend the subsidized flood rates for about 60 days, and we went through that little...
Are you referring to Bigger Waters Act?
Yes.
That was 2012, and they came out with a whole new system in 2012. They tried to get rid of subsidies altogether, and that's where we were seeing, I think actually one of our clients made it into the newspaper. We had a flood premium go to $43,000, and you were starting to see these $40,000 to $50,000 premiums, and it wasn't sustainable.
So I'll give you a true story. I had somebody in our neighborhood that was buying a house, just a single 2,000 square foot house across the street from the water, right, but in a flood zone, and paying cash for the property. They went ahead and the agent said they're gonna get the flood policy. They were from up in the Northeast, worried about the impact if we did have a hurricane, that they'd need that insurance. $16,000. House was 2,000 square feet. Within 60 days, that money was, refunded back to them, but they went ahead and closed.
Wow.
Not even needing flood insurance, but at the same time knowing that I'm supposed to have insurance.
Well, they didn't need it because they weren't
No more.
financing.
Correct,
Okay,
yes.
yeah.
Right.
But technically, you probably
You
still
want it.
you need
Right.
it. Yeah.
Yeah, so our little caveat to this whole conversation is that was the last attempt to try and get flood rates to a sustainable premium where, as of right now, I mean, the debt with prior claims and losses that we've
Sure.
had compared to the premium taken in has been the major issue. So that was the last attempt to try and fix this. Clearly, that wasn't going to work. We couldn't continue to have our premiums be that high. So they actually just stopped all of that. And then they came out with the Homeowners Insurance Affordability Act, Homeowners Flood Insurance Affordability Act, HFFIA. Sorry, something like that.
We're following.
That sounds about right.
Right? Something FEMA came up with. And that came out in about March of 2013, and that adjusted the premium. So we had these crazy rates, they stopped it, and then they came out with an adjustment. So there's no knowing right now. There is the possibility that they could decide to stop this and make an adjustment down the road to try and fix some of these issues, or they may not. They may decide to just continue down this path.
I think the important thing is to for folks to understand why we feel like the rates are increasing because we're losing a lot of money. Mm-hmm. And I think Congress wiped the slate clean, right, for the flood program about 18 months ago. And because of the recent events, we're now $20 billion in debt again because of the subsidized policy. So you see a lot of realtors, petitioning homeowners saying, well, they're jacking up my rate. This isn't fair type of thing. We've been getting subsidies since 1975, essentially. So we're paying a lot less than we were supposed to have been paying for many years. And now we're spoiled.
Yeah, right? I mean, well, the fact that there hasn't been a significant change in 45 years, I mean, I've had a significant change in 45 years. I lost some hair. I gained some weight. But flood insurance still the same.
Well, flood insurance has gone up. I mean, don't get me wrong, it's increased. I know I live on the water, and every year I get that increase, and it jumps, but nothing substantial to the level where it's going to be going now.
Yeah.
So let's talk about that. What does it look like? In today's market, where are we going?
What are we seeing? Right now, and just to your point, as far as the subsidies go, so the houses receiving the subsidies are houses built prior to 1975 because they were built before there were any guidelines or rules. So FEMA gave them kind of a
pass.
They give you a pass. There were no rules in place, so here's your premium. Those houses, so far, we're not seeing as crazy of an adjustment to because the private market has been kind of there and helping out those policyholders for a while. Mm-hmm. Where we're seeing the biggest impact with these rates is, for one, houses that are not in a flood zone. So they're not required to carry flood insurance, but these homeowners have chosen to carry this insurance because anywhere in Florida can flood, so it's a good idea. Previously, those premiums were capped at $572 a year. The rates would go up a little bit every year. I think when I first started in the industry, they were around $430, so there was an increase. Now we're quoting some of these houses that are not in a flood zone, so flood insurance is not required. And the premiums through the NFIP are coming in at $6,000, $7,000, $8,000, which just
makes no sense.
Makes no sense. If the premium's that high for an actuarial premium that's supposed to show the actual flooding risk for this property, why is it not in a flood zone? If
right.
the rate is that high?
You're telling me you don't want me to purchase insurance.
Right.
Basically, it's my house should never flood. But in the past, people would go ahead and get the policy just in case it was outside the 100-year flood event, and here $6,000 for a policy. That's discouraging. So
and it's scary. Yeah. If you have someone moving from out of state and they're not used to flood insurance and they think, well, I'm not in a flood zone, thank goodness, but I want to be safe because I've heard about hurricanes and I've heard flooding can happen anywhere. And then an insurance agent hands them a $5,000 premium. Yeah. Why is it so high if I'm not in a flood zone? So that has been a bit of a struggle. The really good news there is that's where the private market really shines. Okay. So just as a caveat, the private market has only been out since 2012. That's when, with Biggert Waters Act, FEMA actually allowed private companies to come in and offer flood insurance. So they've had now a good 9 years to really kind of figure it out, adjust their rates, figure out how they're going to work everything. Mm-hmm. So they've really got a handle on the X zones. So in most cases, we're able to offer a pretty competitive rate there in the private market. So whereas most of those houses used to stay with the NFIP because the rates were good, they were standard set, you knew exactly what you're getting. Now most of those homes are going to end up in the private market. So the biggest thing there is just making sure you talk to an insurance agent who has access to a lot of private market companies.
What percentage of homeowners would you say go with a private policy versus the NFIP?
Previously, up until now, I believe, and gosh, I've got that exact number somewhere written down in here, but I believe it was about 90%, 85 or 90% of homeowners were with the NFIP.
Yep.
Wow.
And it's a very small number that's been with the private market up until now. Most of the homes that we were placing with the private market were non-primary or rental properties, because FEMA had decided a few years ago that if you could afford a second home or a rental property, you could afford to pay more for flood insurance. So those premiums were significantly higher through the NFIP, and we placed a lot of those at the private market.
Okay.
We're expecting now a drastic shift in direction there, where a majority of homes will probably start moving over to the private market. Hopefully the private market will become more robust. We'll have more carriers come in, better rating factors, and we'll move more homes to that. So it's that's where we're all kind of trying to figure out what exactly FEMA's trying to accomplish here, because if they lose a majority of their policies, they're losing that premium that they need to take to cover their losses.
To pay other losses, yeah.
Correct.
Okay.
So one of the big changes is distance from the water, right? And it's disregarding elevation in many cases.
So it's not necessarily disregarding, but it's not taking into account like it was before. So my first big issue was with the X zones. We're seeing that. Now where we're seeing the major issues are with newer construction homes that are closer to the water. So our house is on the water. Again, since 1975, we've had flood maps in place. We've had guidelines for if you're going to build a home, you need to build it
Certain
at
elevation.
least
Yep.
above the base flood elevation, which is where they expect flooding to occur. So homeowners have been putting tens, hundreds of thousands of dollars into building their houses up using an elevation certificate to figure out the premium based on the exact elevation of the
Base
BFE
floor. Yep.
compared to the first floor. Now, what we're seeing is we're taking other factors into account, and elevation is just a part of that. So now we're looking at your distance to a flooding source. So if you're by the coast, premiums are higher. If you're right near a lake, premiums are higher. They're taking into account the type of flooding source. So if it's storm surge versus a lake that has pretty good drainage, you might see different premiums there. They're taking into account, they're not necessarily requiring an elevation certificate, but it can still get you a better rate. Otherwise, what they're using is basically actuarial science to look at the estimated elevation of the ground and then the estimated elevation of the first floor of the home, the first living floor. So they're not looking at those exact numbers anymore like we were on the elevation certificate. We can still provide it, and they say it could result in a better premium, but what we're seeing is like a $500 to $1,000 difference. They're also taking into account the cost to rebuild the home. This one they've never taken into
That's a
account
big
before.
one.
Yes. So if you have a $2 million house on the beach, they're going to get higher rates than a $150,000 house in a flood zone. So where we're seeing the biggest disparity, thank you. Where we're seeing the biggest disparity in premiums is these houses where they've done everything right. They're built to code. They're built up 10, 12, 13 feet. You know, you've got the
wash through first floor.
Yeah, you've got the garage on the first floor. They've done everything right. Their premiums used to be $400, $500 to the NFIP. Now we're looking at $4,000, $5,000, $6,000, $8,000 because they're close to the coast, they're high value homes, and the elevation of the ground is low. So it's been.
And we have in Pinellas County alone, all throughout Florida, most of the homes that were built in the last 30 years are built that way.
Yeah.
So they have enjoyed that low. As a result, building up, they thought they were protected, and now they're gonna.
Well, I'll tell you, I mean, with a premium increase of that much, it takes me back to 2007, 2008, where ARMs were adjusting, or people were getting into payments where hey, my payment was X when I bought the house.
Sticker shock.
But now it's going to Y because maybe it switched off of interest only, or there was an ARM that went up or something like that. This is a similar type of situation. You get a significant increase in the cost of housing. And, I mean, today they would just sell the home. I would assume, because they probably have equity in it, but you're not going to just quit paying your mortgage because of it, I don't think. But there's going to be folks who are currently living in homes that with increases like this, they might not be able to afford going forward.
Yeah, I mean, I think the tough decision, a lot of these homeowners are probably mortgage free, right? In many cases, they've been in the house, a number of years, paid the mortgage off, and they may make that decision, what do we do? Why carry it?
Yeah.
I mean, honestly, if you're in that house that's built up and you know that, what are the chances? The water gets that high, the county's
Yeah, I see what you're saying.
You know, so at that point, they're being asked, like, don't get flood insurance.
Okay.
We're going to make it,
It's
know,
tough.
it's a tough decision.
Yeah, no, what they have done is they have created, and this is where the idea is that this is going to be affordable and this is going to work, is that they're not requiring a current homeowner who currently has a policy through the NFIP to pay these new rates immediately. They're going to be on a glide path. So they'll have their rate premium wherever it is right now, what they're paying. So if they're paying that $600 and their new premium with the risk rating 2.0 is $6,000, it will go up 18% every year until they get to that new premium.
Oh,
now,
okay.
the one caveat here is that someone who's buying a home, right, they have to get a new flood policy in place. So if they're going out and getting their own quotes, they're going to see that $6,000 premium
immediately.
Can they
Now,
not assume?
They can assume.
Okay.
So we can still assume flood policies, that's what's going to keep this going. And that's what we're pretty much telling most of our buyers right now is find out what the seller's paying, get a copy of their policy, and let's find out if it's assumable. If it's through the NFIP, they'll be able to continue that glide path. And then the good news here is in the past, we could never tell someone what their final rate would be with FEMA. You know, they would ask me, what exactly am I looking at for a flood cost here? Well, I know right now the premium's $2,200, but that could go up 18% every year, and I have no idea what they're aiming for or what they're looking
just
for.
so you understand, 18% doesn't sound like a lot, but it means that it's going to double your premium in 4 years.
Right.
So until it gets to that point. So it's a bigger number than what the 18 sounds friendly.
Yeah.
The reality is it's going to double in 4.
So I want to get into some of these case studies here real quick, but I had a thought too. You know, John, we're working with loan originators who are pre-approving buyers today, right? And we're pre-approving based on somewhat of a guess of what we think homeowners or flood might be, right?
Yeah.
And in today's market, they're probably making offers on multiple homes. You know, like let's say 2 years ago, you were going to make an offer on a home. There's a pretty good chance you were going to figure something out with the seller. You're probably going to go under contract with that. So in that case, a good LO is probably going to reach out to somebody like Lindsey and say, hey, can you quote me on this policy before I issue a pre-approval letter? Today, in the market we're in, I think that's harder to do. But the other flip side of this is I think agents, when you list a property, should be getting quotes on these and include them in the MLS so that we know what kind of payment this borrower is looking at or buyer, whether they're paying cash or whether they're financing. You should know going into it before you go under contract. So a little pro tip there for our real estate agent friends who are watching. But Lindsey, you got a couple of examples for us.
Before we segue into that, I just want to touch on something that the risk now is a look back of 20 years, I'm hearing.
Oh, for prior claims. Thank you so much. I actually forgot to mention that.
So I think it's important that you know that I think disclosures will have to be a little tighter for realtors.
It's
because
confusing
in the past,
what will happen, or I'm interested to see what will happen.
You know, because I may have a home that's in a flood area that hadn't flooded, but I may have the entire second half of the street that was underwater. Mm-hmm. And the look back, my understanding is just like a car insurance policy, that house, they're looking back 20 years. And if you've had prior events, your policy is going to be impacted.
It will be. So the way they're doing it is that the prior loss frequency will not come into account as far as a rating factor goes until you have your first loss moving forward. So as of 10/1 moving forward, as soon as you have a flood loss, they're not going to hit you with that one. That one won't affect your rates, but that will immediately trigger that 20-year rolling history where they'll look back and see.
Okay.
So we do have some homes that are severe repetitive loss properties. They've been getting really high premiums right now. They will continue to have that severe repetitive loss surcharge included in their rate. And then when they have their next flood loss, it will then switch over to the 20-year rolling history and the prior flood losses. Okay. So the issue here is I get a lot of realtors call me and they say, can you tell me if there's been any flood claims on this house? I cannot. There's no way for me to look it up. Wow. There's no clue report for me to run. The only person who can run a flood loss history on a home is the current homeowner. Wow. So then you have to ask a seller to call FEMA, get that report, and then it comes down to you've got to disclose. To your point,
you're saying that should be in the disclosures.
Yeah, there's going to have to be some.
It will probably adjust because if you buy this house and you think your flood premium will be $3,000, you're going to want to know if there's a prior loss in the last 20 years.
Yeah. Wow.
Well, going forward, I would think technology would allow you to write going forward whether there's a problem. But certain neighborhoods like in Pinellas County, and I'm not going to point any out, but we know typically that even with a hard rain, there's flooding that occurs from coming up through the sewer from the drains.
Yeah.
Right. So and it's almost an every 3, 4, 5 year
Yeah, well, and Hurricane
repeat type thing.
Was that Hurricane Ada in November of last year? That kind of surprise end of season hurricane that came through, and we didn't really have any, or actually it was a tropical storm. We didn't really have any wind damage or anything, but that was where some of our low-lying areas on the coast flooded. And you heard so many people say, I've been here 20, 30 years, I've never seen flooding before, and those houses experienced flooding. So that one's going to be tough. So.
All right. Well, do we want to take a look at a couple?
Let's do it.
All right.
Absolutely.
What you got for us?
All right. So I had this one come up, and I found this one to be kind of fascinating and wanted to discuss it with you guys.
All right. Let's dig in.
Now I'm excited.
I mentioned there are new flood maps, right? So we've got a lot of houses that changed flood zones. So I've come across a house that is on a certain island in Clearwater. So surrounded by water, very low-lying area. The house was previously in
Sounds
flood.
like a state.
Yeah, all of Pinellas County. The house was previously in flood zone A. The premium on this house was $2,500 with an elevation certificate based on flood zone A. Built to code, built above base flood elevation, everything's great, $2,500. The house has now been moved to zone X on an island surrounded by water. They moved it to zone X. Flood insurance is no longer required. I quoted this house to see what the premium would be based on this zone X that it was moved into, and the new flood insurance premium through FEMA with the risk rating 2.0 is $3,200. Previously in this zone, they would have paid the $572 on a PRP policy.
Yeah, that's pretty reasonable, though. I could live with that.
I'd be
It's
excited
not too
if
bad,
that's.
but why are we moving that house to an X zone if the flood premium's actually higher, even with an
Yeah,
elevation
I mean, that
certificate?
part doesn't make a whole lot of sense.
It doesn't make a whole lot of sense. So, but the problem here is that the homeowner got excited because they're no longer in a flood zone.
Yeah.
They were expecting that $572.
They're gonna save $2,000 a year.
Right, right. And now, thankfully, that one came about before these new rates came into place, so I was able to place them quickly with FEMA. They'll be on a glide path until their premium increases. But it's just when you're moving to an X zone, and I get people who call so excited, I'm no longer in a flood zone. What's my rate going to be? And there's just some sticker shock there with that. So that one was, I just thought that was kind of amusing. Obviously, that house should probably still be in a flood zone, but here we are.
Yeah, that's the interesting part. Too.
That's interesting.
This is on an island surrounded
is
by water.
Is it island estates?
Yes.
Okay.
Yes, it
Okay.
is. Yeah. so there's that. Now for one of the good situations. So now we're taking into play. So previously with flood zones, we had standard rates in place, and we were only looking at whether you're in an A zone, a V zone, or an X zone. There's a few other zones, but you just don't see them that much around here. And the rates were all standard, depending on your elevation or if you were getting subsidized premiums, primary, non-primary. There weren't a whole lot of factors that went into it other than the elevation of the home.
Okay.
So if you've got a subsidized home, home that previously received subsidized rates in zip code 33702, so a little bit further inland in St. Petersburg, with a subsidized premium previously, they were receiving a premium of about $2,098. Now, because they're further from the coast, so they're further from a flooding source, their flooding source is probably more drainage than it is actual storm surge. The value of this house is about $200,000, so it's a lower value home. And it is on slabs, so it's first floor elevation, but because our ground elevation is estimated or assumed to be a bit higher, their new renewal rate is $1,400.
Okay,
So
there's one that went down.
We've got one that went down.
We've got a winner in Pinellas County.
Yeah, they're
Everybody rushed to move there.
Right.
What I'm seeing with that is if you're close to an X zone, so you've seen those houses where my neighbors aren't in a flood zone, but I am,
yeah.
right? Or we're not in a really significant flood zone. We're just kind of like in an area that doesn't drain well. Those houses are seeing slightly better premiums because of all those rating factors. So now they're getting a better rate for that. So, like I mentioned, the ones where we've got the tricky situation are our newer homes in flood zones built properly, and now they're not getting that. So, another example I have. This is in zip code 33705. So
This one I don't think is going to be so good.
yeah, this is in St. Petersburg. This is close to the bay, so low-lying area.
Okay.
But it's brand new construction. It's under construction right now. It's not even complete, which means the builder had to go to the city and say, how high do we need to build? What do we need to do to build to FEMA code so that this house will not flood in the event of a flooding scenario?
Yeah.
So they built 2 feet above where they were supposed to. 2 feet.
Okay.
So previously, their flood rate through the NFIP would have been about $450. Just quoted that house for them to see what it will be now as we get closer to construction being finished. $4,400.
Wow.
So they've spent tens of thousands of dollars to build that house up. It's built above where previously FEMA said flooding would occur. It's built to avoid flooding, and now their flood premium is $4,400 a year. It is a higher value home. I believe the replacement cost is about $750,000 on that. They can still only get $250,000 of coverage. Right. However, they're getting a higher premium because
so they're maxed at $250,000 in
yeah,
coverage.
by the way,
Still.
that hasn't changed since 1975. So good luck to all of us if there's a disaster and your house is damaged.
stupid.
You can still purchase excess flood coverage, but most people choose not to because why
To
would
who,
I?
like
I don't want
Lloyd's
to pay
of
more.
London or
Any of the private market carriers
Okay.
or the write your own companies that offer the National Flood Insurance Program
What
policies.
percentage do that?
They write excess.
Do many, like, just curious?
No, pretty good amount of them do. Actually,
Okay.
it's an easy opportunity for them. They won't write in situations where the houses aren't a good risk to take, essentially. So like a lot of them won't write on barrier islands. They won't write within a certain distance to coast. So it's a pretty good exposure for them to take on. And the flood premiums aren't bad there. So you can get more coverage than the $250,000, but $4,400 here for $250,000.
It's something that just always interested me when somebody financing let's say a one-level waterfront home and paying $1 million, right? In many cases, and if they're required to have flood insurance and that's $250,000 and they're at a mortgage of $800,000, where's the gap? And as lenders, why are we allowing that? Makes me wonder, because certainly if that house is damaged due to flood, and you're going to get a check for $250,000 and I'm looking for my $800,000.
Well, I think, John, in most cases, it's not a total loss situation. You're not rebuilding the house from the ground up. Like you're replacing flooring, kitchen cabinets, some drywall, probably not even all the way up. You're replacing the 6 feet of drywall all the way around.
You would hope. What we saw with
the biggest value truly is in the dirt, but the rebuild is probably $350,000, $450,000.
Any of our storms that have gone up through like New Jersey, the coastal areas there that wiped out houses, Hurricane Michael that went through the Panhandle, those houses were gone.
Yeah.
There was not even a house to look
Yes.
at. They couldn't be rebuilt for $250,000. They ended up having to sell for the land, and investors came in to buy them up.
Catastrophic wind coverage going to cover some of that too, or is it all just?
Not if there's storm surge. No.
They fight both each other. That's
And if
a tough one.
if it's determined to be mostly storm surge that did it, homeowners will deny all day long.
Yep.
So the excess flood is a good idea. The thing that to keep in mind is the National Flood Insurance Program was created to provide flood insurance for homeowners. It is not meant to make you whole. It was never meant to be a home insurance policy. It was never meant to make you whole in the event of a loss. It was essentially meant to help in trying to avoid FEMA having to come in and provide grants for people or to provide funds in the event of a catastrophe. So that's, I think, where everyone always expects this flood insurance policy should act like my home insurance policy.
Sure.
Private market carriers are offering a product that does work more towards making you whole. So again, that's where the private market can shine. In this situation with this property I just mentioned, where NFIP is $4,400, private market's coming in at $680. So we can switch them over to private market, and I can get them $750,000 of coverage to rebuild their home. I can get them loss of use coverage. I can write them a better policy that will make them whole. So there is some silver lining here. It's just some of these homes are not going to experience the better rates in the private market, and they're going to be stuck with whatever the NFIP provides to them. So,
all right.
It's the biggest thing is just shop around, make sure you're working with an insurance agent who has access to these private markets. And then for realtors and lenders is just making sure, I recommend getting the quote yourself and providing it to a potential buyer. Because if they go out there and they get that quote and it's $4,400, it's $5,000, it's just going to scare people
Making
away.
sure they know that it's assumable.
Yep.
If you're a homeowner looking to sell and you have an existing flood policy and you see an increase of 18%, if you're selling, don't let that policy lapse.
Absolutely.
It's going to change the value potentially of or the amount of people that would look to buy that house.
As soon as the policy lapses, this glide path is gone. You're
Right.
back to full risk rates immediately.
Okay.
So we've got to be really careful. You've got to watch our lenders, make sure they're getting the renewal policy, they're paying that in time. They don't give any 90 days like the homeowners insurance policies do. So once that lapses.
Yeah, you can't let that miss
Right.
a beat. You're done.
Right.
I've done that, just duly noted, years back.
Well, shame on you.
Yeah. Well, it wasn't a big deal.
You blame it on your wife? Are you going to blame it on your wife?
Oh, yes. It's Christina. Christina with a K.
All right. So, Lindsey, you've given us a couple of cases so far. Is there
So far, it doesn't sound that drastic.
Is there anything that's going to make us fall over in our chair?
Look out, my goodness.
Well, it definitely definitely not fall over as much as a $40,000 premium would, but there are some situations out there that are going to be pretty painful for people.
Okay.
So I've got one example that is in Bel Air Beach, Florida, so right on the coast.
Know it well.
Yeah.
Yes.
Yes. So we've got a house there that was built in the early 2000s, built totally to code. First floor is all garage, no living space on the first floor. We've got flood vents.
No enclosed kitchen area. You sure?
Right.
Okay.
Right. We haven't redone the whole thing and turned it into a mother-in-law suite on the first floor. So we've got all our living space up on the second floor. Premium through the NFIP was about $1,200 a year previously.
Yep.
Yeah, we built its code. Everything's great. High value home. Probably about $1.5 million to rebuild. Now, with the new rates coming out, if you look at the quote for that, we're at $6,400 with risk rating 2.0.
That one goes up a little bit.
You have a buyer.
500%. That's,
Right.
Ouch.
Well, not too big of a deal. You have a buyer jump in, take a look at that house. They're going to get that super high premium. So there are situations where it's pretty rough. Again, that house will get, as long as the seller has an NFIP policy in place, you're going to have that glide path increase of 18% every year to get up to that $6,400. Because this is one situation where even in the private market, the best rate we've got is about $5,100.
Wow. Okay.
So the issue where this is going to be problematic is if the seller didn't live there, didn't have a mortgage, doesn't have flood insurance, or they've got their flood insurance through the private market now and it's not assumable.
Yep.
Or if they just let it lapse accidentally, a buyer is going to come in and they're going to have to immediately go to that $6,400 premium. So, and that's a situation. This builder did everything right. House is built right to avoid flooding issues, to avoid damage. They're doing everything by the rules, and yet they're paying $6,400, where you have other houses that are right on the water on the slab.
Is that like in the event like a Category 5 comes through? Like we're betting on that.
We're paying for places where you don't see flooding happen as often. So when you see a storm go through an area that doesn't normally have a major flooding issue, it's not a peninsula in the middle of the water. We're essentially paying the premiums to help cover those losses in areas where those storms that have gone up the East Coast that have hit. We're paying for claims that are happening all over the country, essentially. Wow. Florida has a very small percentage of the actual flood insurance claims across the board, but we've also now
if you have a washout basement, right, essentially a garage that is designed that way to be elevated and wash out in the event of a flood, how much damage dollar-wise could even if it's 6 feet of water ended up in that space, it's concrete block, with some drywall.
Right. Shouldn't have any finished areas. So
right.
You're pretty much
no
just,
finish, nothing, no
idea.
Plumbing, no, yep. That's it. So it can't be super expensive to.
The elevator from the first floor to the second floor is probably expensive to
They
replace.
actually do charge you a higher premium for elevators.
You actually need to have the elevator up on the top floor when the storm's coming through. Just a pro tip.
Definitely.
Who left the elevator with Grandma in there?
It's terrible.
That escalated quickly.
Yeah. Are there certain pocket markets you want to talk about that might be more impacted? I mean, you probably should, if you're looking to buy, be asking agents that identify there are markets here. And I know in Pinellas County, I live on the water. I know there's certain neighborhoods that we see on the news, over the last 20, 25 years that it's typically certain pockets that are impacted more than others.
Where the rate increases are higher, where it's harder to get.
Yeah.
I mean,
going forward, just be prepared that, once that goes on record after that first occurrence, you could see some jump.
Yeah, with that, I would say probably if you're looking, Reddington Shores, Madeira Beach area, all of those low-lying areas down the Pinellas Coast saw a lot of flooding happen. Then there's other areas about Bayshore Boulevard area always tends to flood.
South Tampa.
South Tampa tends to flood a lot. Is it around Coquina Key? That area
St.
in there.
Pete down there, that's the same way.
On the bay, that area is really low lying, and you tend to see a lot of flooding. My thing, because I've had clients ask me, is if I can't get that flood loss report, what can I do? Talk to the neighbors. Neighbors know when there's been flooding, when there hasn't been.
Talk to them before you close on the house and not after, because after they'll tell you everything.
Yeah,
you want to know before you actually close.
Absolutely.
Or go under contract. I mean, that's a good point. Something else you talked about, I'm not sure that we covered it, is DeSantis. There's some talks about him maybe seeing if we could extend some of these subsidized rates.
There have been a lot of legislators who have sent I think they sent a bill up to Congress asking that they stop the implementation of 2.0, review everything, see where this is. The biggest issue is when they looked at all of the rates, they looked at the premium increases, they were mostly looking at this first year in the glide path rates. They weren't looking at really the new purchases. They weren't looking at the new
3, 4,
builds.
5 years down.
Right. They weren't taking into account these homeowners who have done everything right now, and they're now getting blasted with these premium increases that they weren't expecting. You're building a brand new house. You've done everything right. You're under contract already. There's no stopping that.
Yeah.
So there's a lot of things that just commercial properties, RC BAPs, condo buildings, they didn't even separate out any information on that. They lumped it all in together with single family homes. What's going to happen with those policies?
Condos going up or down?
Well, condo for unit owners, they're probably going to see better rates if they do carry their own flood insurance, because now we're looking at the actual floor, the first floor that condo's on. Previously, they got rated from first floor of the building. Now they'll be rated up there. For RC BAPs, for the actual association policy, they're going to get the 2.0 rates. There was no information that came out and said
it's just going to affect your homeowners dues.
You wonder how this plays out, a year, 3 years, 5 years
Right.
in Florida, Louisiana, Texas, these states. I mean, certainly folks think about people that live on the water, and then they're not necessarily worried that they can't afford to pay. But just because you're on the water needing flood doesn't mean we have more people that are off the water that are in flood zones,
Right.
low-lying areas, lower to middle-income households. Like Louisiana, for example, that seems to the last decade, gets tracked, it seems like every year.
Yeah.
What's going to happen real estate-wise in some of these, different, if they don't get subsidized, it's going to be devastating to
Right.
like entire cities.
Yeah, so I mean, we've only seen these premiums now for about 31 days.
Right.
We've only seen the impact so far on new purchases for that 31 days. So I think it will take a little bit more time this time around. With Bigger Waters Act, I mean, they put a stop to that pretty quickly.
Yeah.
Because that's where we saw those $40,000 premiums, $50,000 premiums that were just obscene. That was easy to see that there was something wrong. With this, it's going to take a little bit more time and a little bit more information to show what to expect. The fact that there's a glide path for existing homeowners will probably means that it'll take a little bit longer before Congress catches up and says, okay, we need to adjust some things.
This is becoming unaffordable.
Right. But if we see these issues coming up with the new purchases, the new builds, with the homeowners who are seeing what their premium will look like in a few years, and there's an uproar about that, there's a good chance that Congress could say, okay, let's stop this. Let's take a closer look at what's happening. I hope. But again,
I
who
do
knows?
as well.
Maybe not.
As living in a flood zone and owning a rental property that also is in a flood zone that's not on the water and is certainly not of great value compared to the average home in Pinellas County, I'm curious to see where that premium goes. It's already pretty high. As you mentioned, non-owner occupied, they tend to ding you a little harder. So, again, I can't see water anywhere near my house.
Right.
But I'm paying, again, we talked about, I'm paying for something that I don't really get a value from.
Yeah.
Another bit
Like
of
my new roof.
Like a new roof.
Yeah. Another bit of good news is that with the non-primary homes, we're not seeing as significant of a premium difference on those. Maybe $500, where in the past it was more like double premiums for non-primary. You'd have.
Although the difference from 2012 to today, are there more private carriers now that are jumping in?
Yes.
It seems to be the case.
Yeah,
So
it's been a bit of an up and down situation. It's been, we've had highs and lows with the private market flood with some of these storms that have come through.
Right.
They've, like I said, they're pretty new to the market. They're pretty new to offering flood insurance. So they've come in, they've offered premiums, they've had to make adjustments, they've stopped offering, they've come back. So we're seeing a bit of a leveling out with the private market and kind of some more standardized rates where we can kind of expect what carriers are coming in competitive here, what ones won't. And hopefully all of this will just bring about more carriers, more options, and that will be the best bet for homeowners, especially in Florida.
Well, Lindsey, thanks for dropping by, spending some time with us, dropping some knowledge on us.
Thank you so much for having me.
We'll make sure that people know how to get in contact with you if they watch this and have any questions for you.
Homeowners in flood, you need to call her.
Yeah, you need to call Lindsey. So thanks for tuning in to another episode of the Context to Contracts podcast. On behalf of John Jones and Lindsey, I am
guys.
Bryan. If there's anything that you need, always here to serve.